Florida's rural real estate market is collapsing. Not the kind of collapse you'll see on the news. No foreclosure signs piling up on every corner. No panicked headlines about another 2008. This is something different. Something quieter. Home prices in small towns across the state have been dropping for months now, and most people have no idea it's happening. Cape Coral, down 13% from peak. Punta Gorda, ranked the 4th coolest housing market in the entire country. Cross City, median sale prices dropped 44% in a single year. These aren't coastal vacation homes getting hammered by hurricanes. These are the places where retirees were supposed to find their affordable slice of paradise. And now, the inventory is piling up. Homes are sitting on the market for 3 months. Sellers are cutting prices like they're trying to unload a used car with a suspicious engine noise. 42% of listings in some towns have price reductions. The thing is, this crash isn't driven by the usual suspects. It's insurance premiums that cost more than some people's mortgages. It's property taxes creeping up while Social Security checks stay flat. It's 35,000 building permits flooding a market that ran out of buyers 6 months ago. So we're gonna walk through 10 rural Florida towns where this quiet crash is playing out right now. Cape Coral. Cape Coral, this sprawling canal city in Lee County, is down 13% from its pandemic peak. Year over year, prices dropped 7.1% in late 2025. The foreclosure rate? Cape Coral reported the highest among major Florida metros in the third quarter of 2025. Between 2021 and 2023, Lee County issued over 35,000 building permits. 35,000. And all that inventory hit the market right as mortgage rates climbed and buyers decided maybe they didn't need a canal front lifestyle badly enough to gamble on Florida's insurance market. If you buy a home in Cape Coral, you're looking at around $7,700 a year in insurance premiums for a $350,000 dwelling. That's before you factor in the 0.88% property tax rate. The canals that make Cape Coral charming also make it one of the highest flood risk areas in the state. Builders are panicking now. They're offering mortgage rate buydowns, closing cost assistance, anything to move inventory. And when builders start slashing prices to dump new construction, it drags down every comparable home in the area. The foreclosures are the signal everyone's trying to ignore. A lot of people bought at the peak thinking they were locking in Florida paradise. Now their mortgages are underwater. And if they can't afford those $7,700 insurance premiums on top of everything else, foreclosure becomes the only exit. For retirees, Cape Coral is a calculated gamble. The discounts are real, but the total cost of ownership, insurance, taxes, maintenance on a canal property might still be higher than what you'd pay in a less dramatic market. Punta Gorda. Punta Gorda. Home values here dropped 8.8% year over year. The town's ranked as the 4th coolest housing market in the entire United States in late 2025. 41.8% of homes for sale in the Punta Gorda metro area have undergone a price reduction. That's nearly half. Sellers are slashing asking prices because the buyers who were supposed to show up decided the math doesn't work anymore. Punta Gorda is a waterfront town, Charlotte County. Beautiful views, retirement-friendly infrastructure. But waterfront comes with a price in 2025, and that price is flood insurance. Wind insurance. The kind of premiums that make people on fixed incomes reconsider whether they really need to wake up to a water view every morning. The median home value in Charlotte County sits around $265,800. Median annual property tax, $2,390. Add in insurance, premiums that can easily hit $5,000 to $8,000 a year for a coastal property, and suddenly that affordable home isn't so affordable. The price cuts are the tell. When almost half the market is reducing prices, it means sellers started too high and the market called their bluff. If you're a retiree looking at Punta Gorda, you've got room to negotiate. But you need to focus on newer homes built to modern hurricane standards. Older homes in high-risk flood zones? Those are the ones seeing the steepest declines. Sebring. Sebring is inland, Highlands County. No beaches, no canals, no waterfront gimmicks. Just a retirement town that got caught up in the same pandemic frenzy as everywhere else in Florida. And now it's paying the price. Home values in Sebring declined somewhere between 2.7 and 5.2% year over year. That doesn't sound catastrophic until you see the inventory numbers. Active listings in Sebring surged by 117% compared to the previous year. The market went from tight to flooded in what feels like a blink. In November 2025, the median time a home sat on the market in Sebring stretched to 95 days. Sellers are accepting 92.8% of their asking price on average. Only 8.5% of sales went over list price, down from nearly 28% the year before. The entire dynamic flipped. What happened? Simple supply-demand rebalancing. During the pandemic, everyone wanted out of expensive urban markets. Sebring looked like a bargain. Affordable inland so you're not gambling on hurricanes every year. Decent infrastructure. People bought in, prices surged, and then the outside buyers stopped coming. And when the outside buyers disappeared, local incomes couldn't support the valuations that had been set during the boom. Now you've got 560 plus units sitting on the market. Homes that should have sold in weeks are taking 3 months. Sellers who listed at pandemic-era prices are cutting, waiting, cutting again, and finally selling at a discount just to move on. For retirees, Sebring's actually not a bad option if you can stomach the correction. Advent Health Sebring and HCA Florida Highlands Hospital provide solid geriatric services. Memory screenings, orthopedic care, 24/7 senior-friendly emergency rooms. The healthcare infrastructure is there. Property taxes average around 0.75% effective rate, not the lowest in the state, but manageable. The market now rewards patience. You can take your time, tour multiple properties, negotiate repair credits, ask for closing cost assistance. Sellers don't have leverage anymore. They need you more than you need them. If you're a strategic buyer who understands that high inventory equals negotiating power, Sebring is worth a look. Is worth Northport. Northport used to be one of the fastest growing cities in America. Pandemic, darling. People fleeing high-cost metros for bigger lots, newer construction, semi-rural vibes while still being close to Sarasota. It was the dream. And then it wasn't. Home prices in Northport dropped 5.1% year over year in late 2025. But here's the gut punch. The typical home is selling for 20% less than it did 3 years ago. 20%. That's not a dip, that's a multi-year erasure of gains. The correction is being driven by the same problem you see everywhere in Florida's rural markets. Prices got too high relative to local incomes. The speculative demand that pushed Northport into the stratosphere evaporated, and now the town's left trying to find a price floor that local buyers can actually support. 38.7% of homes for sale in Northport saw price reductions in early 2025. The market's firmly in buyer territory now. Sellers are taking what they can get, and what they can get is a lot less than they were hoping for. The value-to-income ratio in Northport climbed above 5.0 during the boom. That's a red flag. It means the typical home costs more than 5 times the typical household income. Those ratios don't hold. They can't. Eventually, the market corrects, and the correction is what we're watching unfold right now. For retirees considering Northport, the infrastructure is decent. Modern developments, relatively low natural disaster risk compared to beachfront properties. The town's still growing, just not at the breakneck pace of 2021. The risk here is volatility. This is a construction-dependent economy, and if the market doesn't stabilize by early 2026, you could see more downward pressure. The play? Focus on established communities where construction is already finished. Avoid new developments where builders are still trying to move. Inventory. Those areas will see the most price fluctuation as builders compete with existing homes for the same shrinking pool of buyers. Pahokee. Pahokee sits on the eastern shore of Lake Okeechobee in Palm Beach County. And yes, you read that right, Palm Beach County. The same county where waterfront estates go for tens of millions. But Pahokee is not that. This is an agricultural town, small population, local economy built around lake-related activities and farming. And during the pandemic, speculators looked at Pahokee and saw an arbitrage opportunity. Palm Beach County address, dirt cheap land, prices that had more than doubled since 2010. They bought in, thinking they'd found the next undiscovered gem. Pahokee's crash risk percentage is 66.42%. That's not a market cooling, that's a market on the edge. The problem is something analysts call lack of inventory absorption capacity. Basically, when outside buyers stop showing up, there aren't enough local buyers to absorb the homes for sale. The population is too small, the incomes are too low, the market just stalls, and this isn't Pahokee's first rodeo. The town saw an 18.6% price decline in 2012. Boom and bust. That's the pattern. Prices surge on speculation, reality sets in, and the correction is brutal. For retirees, Pahokee is the most affordable entry point into Palm Beach County. If that matters to you, if you want the mailing address prestige, you can get it here for a fraction of what you'd pay in West Palm or Boca. But you're trading affordability for amenities. Lakeside Medical Center is 6.6 miles away. The Glades Healthcare Center provides certified nursing and rehab services, but this isn't a retirement hub with specialized senior infrastructure. Property taxes run around 0.91% in Palm Beach County. Not terrible. But the bigger question is, what happens to your home's value if the crash continues? If you're buying in Pahokee, you're making a long-term residency bet, not an investment. You're saying, I want to live here for the next 20 years and I don't care what the market does. If that's your mindset, fine. If you're hoping for appreciation or even stability, this is a risky play. Reddick. Reddick sits in Marion County. Horse farms, rolling hills, agricultural heritage. It's part of the greater Ocala area, which markets itself as the horse capital of the world. During the pandemic, Reddick became the budget option for buyers who wanted that equestrian lifestyle without Ocala's higher price tags. And now Reddick's crash risk percentage is 66.1%. The speculative premiums that got slapped onto rural land during the boom are being stripped away. The mechanism here is straightforward. Rural gentrification meets economic reality. When buyers from Tampa or Orlando were flooding the market, they didn't care that Reddick's local economy couldn't support the prices. They were paying for lifestyle, for space, for the idea of horse country. But when that outside demand dried up, the local fundamentals took over. And the local fundamentals are, this is a small rural community without a diversified job market. Marion County's median home value is around $194,900. Property taxes average 0.79% effective rate. Not bad. And the county's actually investing in infrastructure. There's a capital improvement program running from 2022 through 2026, covering everything from animal services to airport upgrades. So it's not like the area is being abandoned, but Reddick itself is isolated. If you're retiring here, you're choosing a quiet, rural lifestyle. You're saying, I'm okay with limited amenities, longer drives for shopping and healthcare, and a market that might not bounce back for years. For equestrian enthusiasts, that trade-off might be worth it. You're getting more land for less money in an area that's genuinely beautiful. Just don't expect the market to reward you with appreciation anytime soon. Polk City. Polk City is in Polk County, positioned between Tampa and Orlando. It was marketed as the commuter's dream. Bigger lots, lower prices, semi-rural setting while still having access to two major metros. You could live in Polk City, work in Tampa or Orlando, and enjoy space that was impossible to find closer to the urban cores. The pandemic turned that pitch into a feeding frenzy. Remote work meant you didn't even need to commute every day. Suddenly, Polk City looked like the perfect compromise. And now Polk City's crash risk percentage is 69.6%. But the real story is the foreclosures. Polk County leads the entire nation in foreclosure filings. 1 in every 172 homes in Polk County filed for foreclosure. That's more than double the national average. That's not an anomaly, that's a crisis. That's a market where a significant portion of homeowners are in financial distress. What happened? People bought at the peak. They stretched to afford new construction. They took out mortgages assuming their home values would keep climbing. Many were first-time buyers or people upgrading from smaller homes, betting that the pandemic boom would continue indefinitely. They saw prices rising every month and thought, we need to buy now before we're priced out forever. So they maxed out their budgets, took on debt they could barely afford, and hoped for the best. And then the market turned. Values dropped. Suddenly, they owed more on the mortgage than the house was worth. underwater. And in a county where the median property value is around $215,700, being underwater doesn't take much of a price decline. A 10% drop can wipe out your down payment and then some. A 15% drop and you're seriously underwater, owing tens of thousands more than you could sell for. The foreclosure crisis is creating a feedback loop. Each foreclosure that hits the market adds to the inventory. More inventory means more competition. More competition means lower prices. Lower prices mean more homeowners go underwater. It's a cycle that's hard to break without a surge in demand, and that demand isn't materializing. The remote workers are getting called back to offices. The retirees are looking at insurance costs and reconsidering. The local buyers don't have the incomes to support the prices even after the corrections. For retirees, Polk City offers lower property taxes, 0.73% effective rate, and genuine access to Tampa and Orlando. You're not isolated. You can get to major airports, world-class healthcare, entertainment, shopping. You're an hour from both cities in decent traffic. If you have family in either metro, you can visit easily. If you need specialized medical care, you can get it without relocating. That connectivity was the original selling point, and it hasn't changed. But you're buying into a market with serious financial instability. The high foreclosure rate affects more than just the homeowners in distress. It affects neighborhood stability. It affects property values across the board. It affects the sense of community when every third house on a street has a foreclosure notice or is sitting vacant because the bank hasn't sold it yet. The key is due diligence. You need to focus on established communities where homeowners have high equity. Places where people bought years ago and aren't drowning in debt. Look for neighborhoods where cars are in driveways, lawns are maintained, community amenities are being used. Those are signs of stability. Avoid the new developments where foreclosures are clustering. Those neighborhoods have risk written all over them. One foreclosure on your street might not matter. 5 foreclosures? That's a problem. That's property values continuing to fall. That's instability that could last years. If you can find the right pocket of Polk City, an older established community with equity-rich homeowners, it might work. But you need to do the research, drive the neighborhoods, talk to people, look at foreclosure maps online. This isn't a market where you can buy blind and hope for the best. Cross City. Cross City is the county seat of Dixie County, way up in Florida's Big Bend region. This is rural Florida, old Florida, the kind of place where people go to disappear, to get away from everything. The landscape is flat, wooded, marshy in places. It's quiet in a way that modern Florida rarely is anymore. No theme parks, no beaches packed with tourists, no high-rises blocking the horizon. Just small towns, dirt roads, and people who've lived there for generations. And during the pandemic, a wave of investors and second home buyers decided Cross City was the next frontier. Median home prices in Dixie County fell 20.3% year over year to $212,000. In Cross City itself, median sale prices reportedly dropped 44.29% to around $129,950. 44%. That's not a correction, that's a collapse. That's a market that lost more than half its value in a very short time. That's sellers capitulating, taking whatever they can get just to be done with it. Small rural markets are incredibly volatile when outside demand vanishes. There aren't enough local buyers to stabilize prices. The economy isn't diversified enough to create organic demand. So when the speculators and second home crowd move on to the next hot market, places like Cross City just sink. There's no one to catch the fall. The people who live there can't afford to buy more homes. The people who might move there don't know it exists. And the investors who created the bubble have already moved on to the next opportunity. And then there are the environmental risks. Dixie County has an extreme flood risk. 57% of all properties are likely to be affected over the next 30 years. Cross City itself faces a 100% wildfire risk. 100%. Insurance companies look at those numbers and either charge astronomical premiums or refuse coverage entirely. And without insurance, you can't get a mortgage. And without a mortgage, the pool of potential buyers shrinks dramatically. Average days on market in Cross City rose 52% to 121 days. Homes are sitting, sellers are waiting. and the buyers who do show up are demanding steep discounts because they know the risks. They know about the flooding, they know about the wildfires, they know the insurance situation is a nightmare. So they lowball, and in this market, sellers are accepting those lowballs because the alternative is sitting on a property that might not sell at all. Property taxes in Dixie County are the lowest in Florida, 0.61% effective rate. That's the good news. If you own a home outright, your carrying costs are minimal. The bad news is everything else. Limited healthcare access. You're driving to larger towns for any serious medical needs. The nearest hospital with comprehensive services is a significant drive. If you have a medical emergency, you're looking at a long ambulance ride. The infrastructure is bare bones. This is frontier living, and not everyone's cut out for it. For retirees, Cross City is an option only if you're committed to isolation and old Florida living. You're not buying for appreciation. You're buying because you want land, space, quiet, and you're willing to accept the environmental risks and the lack of amenities. Maybe you're someone who's lived in Florida your whole life and you remember what it was like before the crowds arrived. Maybe you're looking for a place to hunt and fish and live off the grid as much as possible. Maybe you're on a fixed income and you need the absolute lowest cost of living you can find. The market's likely to stay soft for years as it recalibrates from the pandemic insanity. If you're okay with that, the entry price is absurdly low. You can buy a house for the price of a used car in some cases, but you're trading that low price for significant risks and limitations. If you need stability and services, look elsewhere. If you're genuinely ready for rural frontier life, Cross City might be the cheapest entry point in the state. Perry. Perry and Taylor County represent something different. This market is cooling, but it's not cratering. The median home price in Taylor County stood at $170,000 in October 2025, an 11.18% decline from the previous year. In the town of Perry, the median was slightly lower at $156,500. That's a real correction, but it's orderly. It's a market repricing, not a market panicking. The inventory grew 9.5% year over year. Days on market increased to 96, but there's no panic, no foreclosure wave, no desperate price slashing. This is a transition into a buyer's market, not a fire sale. Sellers are adjusting expectations, buyers are getting better deals, and the market is finding a new equilibrium without the drama playing out in places like Cape Coral or Cross City. What's interesting is the rent data. Median rent in Taylor County grew 10% year over year. That suggests there's underlying workforce demand. People want to live in the area even if they're not buying. That's a healthier sign than you see in markets where both sales and rentals are collapsing. It means there's economic activity, jobs, reasons for people to be there beyond speculation or retirement dreams. The local economy has some resilience. Properties in Perry are selling for 94% of asking price on average. That's a 6.47% discount below list. Enough to give buyers negotiating power, but not so steep that sellers are panicking. You can make offers below asking and expect them to be taken seriously. You can negotiate for repairs, for closing cost assistance, for concessions. But you're not vulture picking through desperate listings. It's a normal buyer's market, not a distressed one. For retirees, Perry offers a true, off-the-beaten-path option. Property taxes are 0.79%. You're 49.4 miles from Tallahassee, which means access to a major airport, Florida State University's medical facilities, and all the infrastructure of a state capital. You're not completely isolated, but you're also not in the thick of Florida's retirement hubs. You won't have neighbors from New York and New Jersey comparing notes about where they used to live. You'll have actual Floridians as neighbors, people whose families have been in the area for generations. The risk profile here is lower than the volatile southern markets. Perry isn't going to give you waterfront glamour or equestrian estates. It's just a small North Florida town where the market is resetting to something more sustainable. The correction is happening, but it's not out of control. If you're looking for stability over excitement, this might be the play. If you want to live somewhere that feels authentically Floridian without the theme park tourism or the retirement community monoculture, Perry is worth considering. The town itself is quiet. There's a historic downtown with local businesses. The pace is slow. You're close to natural springs, state forests, the Gulf Coast. It's the Florida that existed before the boom, and for some retirees, that's exactly what they're looking for. Not the next hot market, not the place everyone's talking about, just a solid, affordable town where the market makes sense and the cost of living is reasonable. Madison. Madison and Madison County get hyped as hidden gems for 2025. The rural county has median home prices under $110,000. That's absurdly cheap for Florida. That's Midwest pricing in a state known for being expensive. But the town of Madison itself, zip code 32340, saw a median sale price of $227,828 in late 2025. That's more than double the county median. That's the first tension. The town is more expensive than the surrounding county, and the two markets are moving in opposite directions. Madison town saw a negative 4.58% price change year over year. The broader county, up 6.97%. That divergence is confusing, and it highlights how hyper-local Florida's housing market has become in 2025. You can't talk about the Madison market as if it's one thing. It's multiple markets within a small, geographic area, each responding to different pressures and attracting different buyers. Inventory in the town surged 24.72%. Days on market averaged 65. The sale-to-list ratio dropped to 92% in town, 89% countywide. Sellers are cutting prices. Homes are sitting longer. The market's cooling, but unevenly. In the rural parts of the county, you might still see some competition. In the town itself, buyers have the upper hand. Madison's appeal is cost of living. It's peaceful, semi-rural, far from the tourist crush of South Florida or the Orlando sprawl. You're in North Florida, near the Georgia border, where the culture feels more southern than what most people think of as Florida. If you want to live somewhere that doesn't feel like a transplant colony, somewhere with actual local culture and history, Madison has that. It's a genuine community, not a retirement development. But property taxes are higher than most rural areas. 0.99% effective rate. That's nearly a full percentage point, which adds up over time. And the job market is limited, which matters if you're someone who might need part-time work in retirement, or if you're concerned about the area's long-term economic viability. What happens to property values if the local economy doesn't grow? What happens if young people keep leaving for bigger cities? Healthcare and infrastructure require longer drives. You're not going to find the same level of senior services you'd get in Sebring or even Perry. No specialized memory care, no geriatric emergency rooms designed specifically for older patients. You're dealing with a small-town medical system that does its best but doesn't have the resources of a retirement hub. For healthy retirees in their 60s, that might not matter. For someone in their 80s with complex health needs, it's a real consideration. The strategic play? If you're targeting Madison, focus on the 32340 zip code for amenities. You'll pay more, but you'll have access to the town's infrastructure, grocery stores, pharmacies, local services. If you're willing to go deeper into the rural county, you'll find the true bargains. Homes well under the median, land with space, properties that might cost less than $100,000. You could buy a house outright on a modest retirement budget and have minimal monthly expenses, but you're trading affordability for isolation and uncertainty about future price trends. The divergent trends between town and county suggest the market hasn't figured out what Madison is yet. Is it a retirement destination? A rural refuge? A struggling small town? The answer probably depends on which part of Madison County you're talking about, and the market is still working that out. If you're comfortable with that uncertainty and you're primarily focused on low cost of living, Madison might work. If you need clarity and predictability, this market is still too much in flux. The quiet crash in Florida's rural towns isn't a single story. It's 10 different versions of the same fundamental problem. The pandemic pushed prices in these markets beyond what local economies could support. Outside buyers, retirees, speculators, remote workers flooded in and prices surged. Now those buyers are gone and the markets are adjusting. Some towns, like Cape Coral and Punta Gorda, are dealing with insurance costs that make homeownership genuinely expensive even as purchase prices fall. Others, like Pahokee and Reddick, are learning that rural gentrification doesn't stick when the speculators move on. and places like Polk City are watching foreclosures pile up as buyers from the peak years realize they're underwater. But within this mess, there are opportunities. Sebring and Perry offer more stable corrections with actual infrastructure for retirees. Madison provides an absurdly cheap entry point if you're willing to go rural. Even the high-risk markets like Cape, Coral might work if you can afford the insurance burden and negotiate aggressively. The key is understanding that in 2025, a home's value isn't just about square footage or location, it's about insurability, it's about proximity to healthcare, it's about whether the local economy can support prices when the outside buyers stop showing up. The homes that are holding value, or at least declining more slowly, are the ones that make sense on those metrics. Everything else is repricing, and that repricing is going to continue through 2026. The market rewards patience now. Sellers have lost leverage, inventory is high, buyers can negotiate, but you need to know what you're negotiating for. A waterfront property with a $15,000 insurance bill isn't a bargain just because the purchase price dropped. A rural farmhouse an hour from the nearest hospital isn't a steal just because it's cheap. Florida's rural real estate market is resetting. Some of these towns will find a stable price floor and rebuild. Others might keep falling for another year or two. If you're a retiree looking to move to Florida, the quiet crash is your opportunity, but only if you understand what's actually crashing and why.